Hey folks, it's Simon here with your Tao Daily for Friday the 27th September 2024. Another day, another new all-time high for SPY. The major indices opened at their highs following basically a flat GDP revision for the second quarter. We saw a bit of selling creep in the first 10 minutes, which meant they closed off their highs for the day, but still in the green. What's more interesting than SPY right now is the Nasdaq. Let's have a look at the Qs. And the reason why this one is interesting is because you can see how back here the Nasdaq kind of whacked its head into this trend line and this fib level. Back here we broke the trend line, still struggled a bit at the fib level, but yesterday we broke out. All right, so we've broken above this previous swing high. So what does that mean? Well, it means we've now got a pattern of higher highs and higher lows from this August the 5th low. All right, which means we're back in an uptrend. And the fact that we've taken out this fib level, whoops, let me just delete that line. That's a bit ugly. The fact that we've taken out this fib level means that the previous all-time high now becomes the target. Doesn't mean we get there today, or doesn't even mean we get there in a straight line. But the Nasdaq is now odds-on favorite to at least test its previous high. Same goes for the tech sector. The tech sector here is starting to look a little better as well from a technical standpoint because that is making higher highs as well. All right, so finally dragging itself out of the woods. Let's have a quick look at sector performance. So this is the performance of all of the S&P sectors year to date. Only two sectors are outperforming the SPY, which is the black line here. That's communications, which is a mixture of growthy type stocks like Google and Google and Meta and Netflix, and some of your more defensive names like the big telcos. And then we got utilities, which is far and away the leading sector year to date. This is about the most defensive sector in the market, all right? And this is usually a sector that will outperform if the economy is looking rocky. Now, if we look month to date performance, well, let me just point something else out to you. The second worst performing sector year to date is XLY, consumer discretionary. If you look at month to date, it's actually the best performing sector. All right, now XLY, consumer discretionary, they tend to be stocks that people will buy if they're optimistic about the economy. All right, XLY, it's largely Amazon and Tesla. You've got things like Home Depot, McDonald's, Lowe's, Booking, TJX, Starbucks, Nike, Chipotle. These are stocks that do well when people have got disposable income. So the fact that both consumer discretionary and XLU are outperforming month to date, that shows a slightly confused message. XLU is something you buy when you're cautious, and XLY is something you buy when you're bullish. I just note that we did see an improvement in breadth yesterday in terms of the percentage of stocks trading above their 50-day moving average. I showed this chart yesterday where we were seeing a real deterioration in breadth. Well, that is actually starting to repair itself. So if this blue line continues to go up, that will help fuel a continuation of the rally. That's what I got for you. I hope it helps, and I hope you have a fantastic weekend. I'll catch you on Monday.